Any questions on that?
Talking about the mempool, so I did some research about it.
Okay.
And yeah, and for Bitcoin, each miner they can configure the mempool size
Okay.
for themselves, and the typical maximum size for the mempool is 200 megabytes.
Yeah, thanks for that follow-up. I remember you asked that question, so thanks for investigating. Now, in Ethereum, you will see standards around contracts. And these standards are often referred to as ERC, which is request for comment standards. And think of them as standardized interfaces for a smart contract of a particular type. And what that then allows you to do, once you define the interfaces and everybody implements that interface for a particular smart contract type, that leads to higher interoperability of blockchain applications. And there are two notable standards that I just want to mention here today. There's the ERC20 fungible token standard. And essentially what that is, it is a smart contract that implements a new token. And it is fungible, meaning that you like 1 unit of that token is exactly the same as 1 unit of the same token, just like the US dollar, right? The US dollar, you have a dollar bill, you don't care whether it's that dollar bill or that dollar bill, right? You just have that $1 bill. So it's also divisible and non-distinguishable like US dollars. The other big token standard is the ERC 721 standard, which is the non-fungible token standard, or NFT. And these are essentially non-fungible tokens. And that means each token is unique, like a unique piece of art, or a piece of real estate property, or your Seattle University degree, your social security number, right? I mean, you could go on and on. Like, think of anything that is unique, theoretically could be a non-fungible token. Certainly over the last couple of years, you probably heard about cyberpunks and Bored Apes. These are all non-fungible tokens. And we'll look at how these are implemented in a smart contract in a future lesson. So in terms of use cases, a broad range of use cases. Mark, you already mentioned finances, financial use cases. I mean, there's remittances, right? Like sending digital assets overseas. Just to give you an idea, I had to send my parents some money, and I called up the bank and I was like, okay, how do I do this? And they're like, oh, you have to print out this form, fill out this number on a piece of paper, and then fax it to us. And it's going to cost you $200, and it's going to take a week. And I was like, I'm not going to do that. So I called my dad and I said, sign up for a Coinbase account. And then I had him on the phone, and I basically transferred the money over, and it was instant, like a few seconds, and it cost me $5. So remittances, certainly a great use case. Now, one thing that I mentioned on Tuesday is that cryptocurrencies are extremely volatile, right? Like Bitcoin currently 19,000, a few months ago 70,000. And there is now new types of digital currencies that are built on top of, let's say, Ethereum and other blockchains that are referred to as stable coins, which are, think of it as a digital version of a fiat currency. So there's on Ethereum, again, there's many stable coins, but there is DAI, which is an algorithmic stable coin, and then there's USDC and USDT, which are essentially backed by a central entity that issues those tokens. So they have, a bank account with $1 million, and so they issue 1 million tokens that then can be traded. Exchanges, so you can exchange tokens for another, so you can use, your USDC and buy Ethereum. You can have derivatives. You can have options. You can have passive income. So you can, for instance, be a market maker and provide liquidity to a decentralized exchange. So a decentralized exchange is essentially an exchange where you can exchange one token for another. So you can exchange USDC to ETH. Now, if you have USDC and ETH, you can provide liquidity to that decentralized exchange. And then for every trade that happens, you get a percentage cut. So there's passive income opportunities. I already mentioned options, store of value, and payment. And then if we're thinking about non-fungible tokens, of course, art collection. And what is really neat about non-fungible tokens, so if you think about an artist today, so you create a piece of art, and then you sell it, you make $100. And now that art is gone, right? It's with Duke. I sold it to you. And then Duke now sells it to Mark for $1,000. Duke makes a handsome profit, but the artist makes nothing, right? Because he already sold it to Duke for 100. And what NFTs allow you to do is to encode in the smart contract that for every sale that happens, the original artist gets a cut. So you still sell it for $100 to Duke, and then Duke sells it to you for 1,000. Now the smart contract logic encodes that I will get 5% of that 1,000. And so the artists, it's much more, beneficial to artists, and it certainly has caught on over the last couple of years. A lot of art has been generated. You all know about the metaverse. There are, of course, Meta is building the metaverse, which is a centralized metaverse, maybe. But there's already projects out there that are decentralized metaverses, like Decentraland is one that I can think of. Games. There's games on blockchain. There's also some called play to earn, where if you play a game, you earn tokens that you then later on can exchange for whatever. Loyalty rewards, that's an application. Access, so this is really interesting. So you may have heard that, the Bored Apes, which are, has everybody seen a Bored Ape? All right, let me show you the Bored Ape. This is a little bit more fun. Actually, here, yeah, no, let's browse all NFTs. All right, these are all fake Bored Apes, but because this is way too cheap for a Bored Ape. See whether there's a real one. All right. All right, that's more like it. So these are Bored Apes. These are NFTs. I don't know how many there are, but let's see whether we can figure that out. Oh, there's item activity. All right, so there we go. Bored Apes. All right, so there's 20,000 of at least these Bored Apes. And if you go back to the website, So this Bored Ape is number 11,194, meaning it's a unique one, right? It's a non-fungible token. That's how it looks like. It's essentially a JPEG, and it currently trades for $20,000. Now that is not expensive. They, like 6 months ago, some of these Bored Apes traded for $500,000. And you may wonder, well, why that much money? What the community behind the Bored Apes were able to do is create a sense of scarcity. There's only 20,000 out there for the entire world, and exclusivity. And they did that by, for instance, attracting celebrities to buy Bored Apes. Eminem has a Bored Ape. I don't know him, but there's many more celebrities that have Bored Apes. And what a Bored Ape, when you're a Bored Ape token holder, of course, that is visible on chain, right? It's basically you hold that NFT in your wallet. And what that gives you is access. There's certain clubs, certain websites, certain events, where it basically checks, do you have the wallet with a Bored Ape in it? And if you do, great, you have access. And if you don't, you don't. And so there's a little bit more behind just the GIF or the JPEG that is associated with it. There's also kind of value associated with being a holder of them. And 20,000 is actually not that bad. And so that's why I mentioned access. Identity, there's some called soul-bound tokens, where it basically are, oh, sorry, yes. Soul-bound tokens where you where there's essentially properties of yourself that are encoded as an NFT on chain. So think again as your Seattle University degree, that could be an NFT, and that is directly tied to your identity. Or if you go, you could also think about, you go to a concert or to a conference, that will give you an attendance NFT that maybe down the road will be used in some way, shape, or form. There is governance. So a lot of the projects in the crypto space are community driven. And so now how do you govern, right? Like, how do you vote? And so one way to do that is through on-chain voting based on the tokens that you hold. So Oleg has 1,000 tokens, Perea has 50,000 tokens, and now there is a vote that is coming up. And so Perea is able to take her 50,000 tokens to have a much higher weight than Oleg in that vote. Supply chain, so since the blockchain is immutable and public, you can track things very well, which lends itself well to a supply chain. There's actually a chain that's special. There are many chains that specialized in that. VeChain is one of them. Public goods funding, that's an interesting one, where you basically, public goods are goods that benefit everybody, but that nobody wants to pay for. And so public goods funding is a way to pay for a public good after it was created. Social media, some people are trying to implement social media on chain as a way to facilitate freedom of speech and be censorship resistant. Mark. Yeah, I mean, think of, a bridge could be one of them. That's like a real world public good, but there's also public goods in the digital space, and you could think of security as a public good, right? Like Forta is like the foundation I work for is creating a network that monitors on-chain activity for attacks and generates threat intelligence, so everybody can protect themselves better. You could think of that as a public good.
It's like How would blockchain fund that particular products, I guess?
There's and we'll talk about that more. The Gitcoin grant is a platform that facilitates retroactive public good funding, where you can basically put out a proposal, and then people can support that proposal, and then there's some matching, and you get payout at a certain point in time in the future when the project materializes. And then there's also projects that are looking at utilizing the distributed nature of blockchain for like distributed storage, for distributed compute. So there's Filecoin is like a file storage solution, and the Internet Computer is, I think, a distributed computing chain. And this list, you know, I think is continuously expanding. Any questions?
These use cases, they sound really good in theory, but when we like actually try to use them on chain, like to build a smart contracts, and the common problems that we tend to pick about is that the transactions are not really stable, since the users they need to wait for like a good amount of time for the transactions to be go through, and then there are the transaction fees which are quite high. So most of the time these applications are not like quite good for a large number of users.
I very much agree. Right now, it is still for specialists and enthusiasts, and there's many problems. There's actually, if you I'll put the video on the discussion forum. There was a video a couple of maybe earlier this year where somebody, you know, really just talked about all the problems that Web3 and blockchains have. And speed and usability and high transaction fees are certainly big problems that need to be solved. And I think, you know, Ethereum going to move proof of stake and kind of their roadmaps are kind of designed to solve some of these issues around transaction throughput, transaction cost, not necessarily usability, but I think that also needs to improve. Also, one thing to keep in mind is that blockchain applications today, as I mentioned, there's an on-chain component that lives on a blockchain, and there is an off-chain component that lives on the web, and the web is centralized, right? And so, for instance, there was a decentralized exchange, Uniswap, that you know that allowed you to exchange one token for another. And I don't exactly recall what happened, but somehow they basically were encouraged to ban trading of a particular token. Now, how can they do that? On-chain, they cannot, because on-chain, it's immutable. The smart contract didn't have that restriction, and so anybody can trade that token if they interact with the smart contract directly. And so the way they implemented it is they basically had a block list on their web front end that basically restricted trading of the token.
The common users, like the non-technical users, they cannot interact with the blockchain.
That's right. That's right. So I think it probably was very effective, but not 100%, because you could always go to the blockchain directly. But yeah, I think even technical problems, people have problems doing that. I think it's quite complex. Now, any questions? And feel free to interrupt me anytime. I know I kind of tend to talk. Okay, Duke, to your point in terms of transaction speed. So there is something called the blockchain trilemma. And there at the top here is essentially scalability, security, and decentralization. And there's always a trade-off. So today, if you want to get more scalability, and that means you can process more transactions per second, you may have to give up security and or decentralization. The reason why Ethereum is so slow, right? Every block gets produced every 15 seconds, is because the network is huge. It's decentralized and it's extremely secure. Now, for financial applications, that may be the appropriate trade-off, right? Like if you, well, maybe the appropriate trade-off. For other applications, Ethereum may not be the right blockchain. So if you think, for instance, gaming, right, where you need to have fast transaction speed that is super cheap, if it goes down, it goes down, right? Like it's not a huge deal. And so, for instance, there is a blockchain called the Ronin blockchain, which is the Axie Infinity game. That's a separate blockchain that optimized for scalability. And so there isn't, my point here is there isn't really a right configuration of this pyramid here or triangle here. It really depends on what is important to you in terms of the applications that you're building. Any questions on that? This slide, real quick, this is just a blockchain history timeline with some notable events. So in 2010 was the first Bitcoin being mined. Actually, I think that was 2009 because the paper was in 2008. So the first Bitcoin was mined in 2009. Sorry about that. In 2013, Bitcoin surpassed that cannot be right, not 1 billion. 1 million market cap? Yeah, I would think so too. 2013. Duke, look it up. Help me out. I'm 1 billion?
Yeah.
Okay, 1 billion. Okay, good. 1 billion. I mean, it recently was 1 trillion. Then in 2013, Vitalik released the Ethereum white paper. In 2015, essentially Ethereum launched. 2016, that's a notable event in terms of security. There was a huge attack called the DAO attack that essentially stole $72 million. And you know, look at the date. That was in 2016. Today, that would be hundreds of millions, if not billions of dollars. And what that did, let me show you. It created a hard fork. So we have the blockchain, and the hack occurred here, right? And then, you know, more blocks are generated, etc. And the hack still exists here. Well, this was such a big hack that the Ethereum community was like, oh, this is really putting our chain at risk. We should hard fork. So basically what they did, they created a second chain that did not have the hack transaction. And that resulted in two chains. This one is Ethereum Classic. I think the ticker is ETC, if I'm not mistaken. And then this is Ethereum. That's how those two chains came to be. So if you see those two chains, like let's say on a decentralized exchange, you know where that came from. Funny thing is, if you have one ETH here, and the hard fork happens, then you have one ETC here and one ETH here. So you get something for free. Now, you could argue that when the chain forks, value is divided, and Ethereum price may go down, ETC price may go down a little bit. In combination, it's whatever the ETH was over here, but not always necessarily the case. And to like last week when Ethereum moved from proof of work to proof of stake, something similar happened. There was a new chain created that was called Ethereum proof of work that continues to live. It's essentially the Ethereum that as it existed up until 2 weeks ago, but now there's two chains, Ethereum proof of stake and Ethereum proof of work. Now, Ethereum proof of work, I doubt will succeed. 2017 was the first bull market that put BTC on the map, and BTC had an all-time high of 28K. So that's kind of where BTC is at right now. In 2018, the Lightning Network beta was launched, and I talked about the Lightning Network on Tuesday. 2018, there was a bear market, and so the price plummeted from $20,000 to $3,000. In 2020, there is an event called the DeFi Summer. And DeFi stands for decentralized finance. And so this was really when a lot of innovation happened in kind of the financial sector on chain. So decentralized lending, decentralized exchanges, derivatives, a whole slew of applications came into being, and that created a lot of excitement, contributed to the bull run later, because now the blockchain no longer was this kind of toy thing that people didn't quite know whether you could have useful applications to, hey, look at all these useful applications that have millions and millions of users. Now, still not very usable, a lot of issues, but at least there were these applications that really showcased what is possible. And Duke, to your point, also think a little bit about, I mean, you guys don't remember, but I remember the internet. I had now I date myself. I had I don't know what it's called in English, but it's basically where you take your phone and you put it in this thing. Yeah, it was not even dial-up. It was like with a phone as opposed to a modem. So you took your physical phone and stuck it in this device, and then it was basically making noises, and that's how it transferred data over the internet. And it was dog slow, right? Like it was not very usable either, right? And so I think a lot of these emerging technologies kind of start off crappy and get better over time. Internet case in point. And I hope this happens with blockchain and as well. Then in 2021, we have the NFT boom. So Bored Apes at $500,000 per ape. Bull market generally, BTC high of almost $70,000. The total crypto market cap was $3 trillion. In 2022, a lot of layer 2 blockchains launched. And these are essentially, think of it as kind of blockchains that build on other blockchains to increase transaction speed. In 2022 is also when the bear market happened due to regulatory pressures and macroeconomic climate. And then in 2022, something extraordinary happened where Luna, which was a blockchain with a stablecoin UST, Terra, UST. It had a stablecoin, an algorithmic stablecoin, and the entire blockchain essentially imploded, meaning it no longer exists, and a lot of people lost a lot of money. Now, one thing that, and I'll show you this site here, the live. Total value locked, TVL, across chains. And so you're able to see kind of how much digital assets, like if you convert the digital assets into dollar value, are locked on chain, are locked in a smart contract. So I mentioned earlier kind of the liquidity example where I provide liquidity to a decentralized exchange. Decentralized exchange is a smart contract. I send a whole bunch of digital assets to that smart contract. The smart contract will hold it and then give me a cut when transactions are being made. And so there's a whole bunch of applications where essentially I send digital assets to a smart contract, it gets stored in the smart contract. And what this website shows is how much are these digital assets that are currently locked on chain valued, and does so by chain, for instance. And so that kind of gives you an idea in terms of the user base behind a particular chain. And how much it is trusted maybe as well. So Ethereum currently has, over half of all the total value locked. Maria, you look puzzled. So this on the right here, so this is, yeah, let me explain this. So this is the total value locked in dollar amounts, right? So here you see kind of the DeFi summer, the bull run, and then the bear market. So this is just looking at all the digital assets that are locked in smart contract, what's the value of them over time? And then what this chart looks at is how are all the digital assets distributed across chain and normalizes that, right? And so this is really more of a market share view of all the digital assets. Today, 57% are locked in all the digital assets that are locked in smart contracts, 57% are locked in Ethereum. I'm sorry, Duke first, and then you go, Mark.
More people. 2021 is almost 5%. They are trying to change.
Yes, and that is the case, and it's the case because there's more competition. So if you look at October 2021, there were no other. Well, there were a few other smart blockchains, but many more emerged and matured and gained user base, and so there's more competition. And there is a lot of criticism of Ethereum in that it is slow and expensive. Like today, it's not expensive because bear market, nobody uses it. But a few months ago, to send ETH, probably had to pay like $50. Today, you pay maybe $3. And so when it is expensive, then people are like, oh, this is really just for big traders, right? With a lot of assets. What about me, my retail investor that only has $100? I'll go to a cheap chain. That now, if you think about the trilemma that I showed you earlier, it is cheap because it compromises on one aspect like security. And that makes sense. Like again, Ethereum for how many billions of dollars, right? It needs to be secure. Whereas another chain with less digital assets, maybe security is not that important, right? So again, it kind of depends on your audience, users, and use cases. So basically what it shows down here, so this is the total value locked, and there is a variety of applications, right? And so basically it just tells you what application it is locked into. And so the MakerDAO is one, Uniswap is the other one that I mentioned, which is a decentralized exchange. Yeah, it just kind of tells you where it is distributed. So it's just not, it's basically a view that allows you to gain insights into what are the heavily used chains where a lot of value is locked, but also which applications are they locked in. Maria, any questions? Okay. This is my last slide for before the break. So generally speaking, I think we're still at the beginning. We're basically at the dial-up speed of internet with a crappy text-based browser. And I think there is going to be a tremendous amount of innovation and experimentation. A lot of things will fail, just like they did during the .com era. And one thing that I think will really cause this to take off is once there's a legal framework that ties blockchain to real-world assets. Think of an NFT on your house, on your physical house, that you now can fractionalize, sell, you can rent it out, Airbnb, right? Like, I mean, there's a lot of possibilities. You can put it as collateral in a decentralized lending protocol and gain interest on it. I mean, there's a whole bunch of applications. And I think I mentioned this last time, you know, it's similarly when Netscape was first introduced as the first browser, or at least graphical browser, nobody was thinking about Uber, that you're able to call with your phone. And so I think maybe something similar will happen. We cannot envision the applications yet. Questions? All right, let's take a 5-minute, well, yeah, let's take a 5 minutes break. Be here back 7:10. And then we'll talk about cryptography.